Well, the central banks, many of whom have seen this coming, I mean, particularly the Asian hegemons, they've seen this coming for a long time. And they've also informed the entire global south that this is coming. So the result is that central banks around the world, with the exception of America and the European nations, I mean, the Brits, the French, the Germans, and so on, have been accumulating gold as a greater proportion of their overall reserves. So that makes sense. Now, I would draw a distinction between the relationship between individual fiat currencies and the relationship with gold, which in everybody's common law is real money. There is not enough gold around, if you like, for everybody to get out of a foreign currency and use gold as safety. And also in pure accounting terms, of course, going into gold for a fund manager actually does provide risk because it could go up, it could go down from his point of view. So I think, the gold is almost sort of standing aside from this. And at the moment, it's being driven by other factors. We've had a very substantial shakeout in gold and silver since January, the January peaks. On that basis, you would have thought that, first of all, speculators would leave the market, but they weren't really in there in the first place. I mean, there was very little speculation, actually. Secondly, you would think that demand, if you like, for physical gold and silver would decline because the steam is taken out of the market, but not at all. I mean, I don't know what you're seeing in America, but certainly what's going on in China is still very, very strong demand for gold and silver. The banks are rationing gold, physical gold deliveries. And only this morning I saw that the Chinese Construction Bank, instead of doing the rationing, like a sort of at 9 o'clock in the morning, if you're there at 9 o'clock in the morning, literally by 1 minute past 9, it's all gone. That's been the situation. So what the China Construction Bank is doing is now running a lottery system. You pay your money in to buy gold, and it's like getting a lottery ticket. You may or may not get it. You probably won't get it. I mean, the point about it, which I think is desperately important to understand, is that the Chinese do understand that gold is money. We don't. We've forgotten that in the West. There is also a very, very strong savings culture in Japan. I mean, overall savings are reckoned to be about something like 40+%. But if you strip out the industrial investment, you're left with household investment of somewhere between 30 and 35%. That is, in dollar terms, an accumulation of between $5 and $6 trillion every year. So where does it go? Well, property is dead. That's of no interest. The stock market is of limited interest, let's face it. It's only recently just about doubled. But really, that's just catching up with what was going on elsewhere. What they've been doing is, I mean, the banks have been holding on to deposits by coming up with innovative means of trying to produce a better rate of interest. But at the same time, the People's Bank of China has been reducing its interest rates. So the returns on a bank deposit are very low. But all these banks offer a gold accumulation account, which can run alongside your deposit account. So for a minimum payment of something like 500 yuan, which is less than $100, you can open a gold accumulation account. And you can put in a standing order to transfer from your deposit account to your gold accumulation account so much per month. You can see just how enormous, with net savings of, sort of in the order of $5 to $6 trillion every year, what an enormous impact this is going to have on gold. And we're seeing it already. We really are seeing it already. Now, these banks don't take delivery out of the Shanghai Gold Exchange. It remains within the vaulting system, so we don't actually see how much gold is actually behind these accounts. I don't know whether they're 100% backed or not. I have no idea at all. I mean, if they run under normal banking prices, under a normal banking system, then they would probably have a leverage position insofar as they would back the position with about 10-15% of gold or something like that. Now, that would be the unallocated way of doing it. But having said that, that only really works with credit in your own currency, where everything is measured in your own currency. There is a shortage of gold. It's as simple as that, and it's disappearing. And I think that to some extent, the price in China on the Shanghai Gold Exchange and also on the Futures Exchange is actually being set in the West. So we're suppressing the price in our paper markets, which is leading to price suppression there. If that price suppression wasn't there, I would fully expect gold and silver to be far higher. I wouldn't speculate how much, but they would be far higher. So that, I think, is the background for gold and silver. The other thing I would mention, which is interesting, is the complete lack of speculative interest in the West. Excuse me, I'm getting over a cold. If you look at open interest on COMEX in silver, it's the lowest it has been for more than 20 years. If you look at open interest in gold, it is lower than it has been since around about 2004. These are, by any measure, heavily oversold markets. When we say oversold, what we really mean is that the level of speculative interest is zero, just about zero. Now, I know there are positions, but they are pretty firm positions, and any move to reduce prices from here is likely to be met with buying. So overall, this situation now, I think, is ripe for a pretty good move in gold. I would say there's one little caveat that I would put in all this, and that is that if I'm right about the Wile E. Coyote situation hitting Japan first, or maybe someone else first, particularly America, then markets are going to crash. In a market crash, in all that pandemonium, there will be a markdown on gold. I wouldn't bank on it. I would hope for it, because as a stacker, my goodness, what an opportunity. But it would be driving things in completely the wrong way. And the reason I think this could happen is that recently I've noticed that the market has been marking gold up when the US Treasury yield drops a little bit, marking it up when the dollar's trade weighted drops a little bit, and vice versa. This is just nonsense. It's complete nonsense. It's a complete misunderstanding of the role of gold compared with credit, which, of course, is really represented by fiat currencies. It is, if you like, the macroeconomic establishment's response to market developments, which just shows their ignorance, real ignorance about the relative position of gold, what gold's function is in a monetary system. They should be looking at the risk in the whole system. And what you're going to get is you're going to get far higher bond yields and far higher gold prices. The gold prices reflecting far less purchasing power for the dollar, far less purchasing power for the euro, and also the yen. If you look at the 10-year bonds for the G7 nations, 4 of them are already going into new high ground. I'm talking about the yields going into new high ground, which means that the prices are dropping. The 3 that have yet to go into new high ground are the US, Canada, and Italy. But the others are definitely in new high ground. The others being Germany, France, the UK, and Japan. Now, the reason this is important is that the failure, if you like, of the Iran situation from the point of view of America is undermining the overall position of the dollar. We can see on the macro level, if you like, that the petro yuan is replacing the petrodollar. We can see that the foreign exchange settlements into the yuan do not involve the dollar, which again releases dollars which would otherwise be tied up in the foreign exchange markets. We can see that Iran is may not be winning the war, but it really does look as if she can drive America out of the region. She has bombed America's bases in the friendly nations around the Gulf. And not only that, but she's insisting that the GCC membership basically tells America to leave on pain of being hit by her really very, very advanced missiles. So that is something that's going on. Meanwhile, President Trump is chickening out. I think it's the best way to put it. He has obviously sent this list of 15 demands to Iran with a view to pretending to negotiate, but they're not serious negotiations. And at the same time, by dispatching, elite forces and Marines to the area, he is threatening Iran. But he would be very unwise to actually deploy them because if you like, the